It's been a year to forget for some of the resource giants. Anglo American is down by more than half for the year. The world's leading diversified miner BHP Billiton is part of a $5.2 billion compensation claim that the Brazilian government intends to pursue over the Samarco dam disaster. And if that's not enough, resource shares are trading at multi-year lows and in some cases historic lows as commodity prices plumb depths not seen for years. On this Moneymakers, I'm joined by Peter Major, a mining consultant at Cadiz Corporate Solutions, and Lorenzo Tencati, who's executive director at Bryanston Resources, to try and figure out where the new bottom is for resource shares. Do you like to pick bottoms, Peter Major?
Yeah, I like to start at the last known bottom, and that's always a good place to start. So you can say, what was the bottom of gold? Well, it was probably in 1971, 72. I think it bottomed out at $200 in today's terms. Mm-hmm. And if that's too scary, say, well, let's go what the mean. What's the long-term average? Well, for gold, the long-term average is 550. So it's probably the scariest commodity on my radar right now, because most other commodities are now below their means. So why is gold trading at double its mean, Bruce?
Why?
Maybe there's some bearing in the fact that it is more commodity. It's more currency than commodity. Mm. And what's kind of sad or ironic is we should be playing on that, because we did for years and years. We made the majority of our exports just from gold. And the nice thing about gold is because there's so much out there, whatever we produce, it doesn't affect the price. Not like we did with manganese and platinum. Mm. You know, there we went out with a double-barrel shotgun and we blew both our feet off. We flooded the market on something we had a monopoly on, and now we've killed ourselves for the next 20 years. But something like gold that we don't have a monopoly on, we can produce as much as we want. It doesn't affect the world price. And yet it's the gold sector that the politicians and the unions have attacked the most.
But we're sitting with our historical lenses on, aren't we? I mean, gold is deep, it's hard to get out the ground, it's increasingly expensive and dangerous to get out of the ground. Is that really the commodity we should be worrying about? I
think we should be worrying about whatever we can sell that raises dollars. Mm. Whatever we can produce that we have a competitive edge and puts people to work. And gold is it. You know, we have 45% of the world's gold, and we had 550,000 men on the gold mines. Now we got 100. And we've got more gold in the ground than we've taken out. And we've got better technology, better methods of taking it out, but we've lost the will to do it. I think we attacked an industry without realizing what happens if that industry's gone. You shouldn't attack some industry until you've got a backup for it.
There we go. I mean, Peter Major is very cross, Lorenzo, with the way in which politics has interfered with the business of mining and the business of commodity production. What's your perspective?
Well, you know, Bruce, I think we are not reaching the bottom yet. And the way we look at it, or we like to look at it, is more in a fundamental perspective. So if you look at were you to rebuild the mining sector bottom up today, would you be able to produce at a cheaper price, a cheaper cost? And I think the answer is yes. So even though in the short term, it's definitely painful for organizations that were used to, sell at a certain price to produce at that declining price today, in the midterm, technology can significantly change the price at which, or the cost at which we get resources out of the ground.
However, South Africa is quite averse to the idea of using technology. South Deep, for example, is very much a technology play in the gold mining sector, and it probably poses quite a political risk to the South African government, which is very keen to see mining companies keep employing people at ever higher wages, something that bugs Peter. I'll get on to him in just a moment. Do we really have the technology option open to us?
I think you raise a very important point. I mean, it's at the end of the day, technology and politics play a very intertwined role. I think, look, if you look at where global competition will lead mining, or I hope will lead mining, is in a place where technology will play a much bigger role, which doesn't mean less labor. It just means more skilled labor. It just means a different type of labor. It just means labor for ancillary services that are around mining. So I think technology and government should work together, or technologists, technocrats and government should work together to make this happen in a way that doesn't affect labor in the medium to long term.
But Peter Major will tell you, and he's about to tell you, that trust, any sort of sense of cooperation or cooperative effort to rescue a mining sector is so ideologically divided that, that it feels like we just headed down a one-way street here, Peter.
I think you've summed it up, Bruce. we're being controlled by ideology, just like the Soviet Union was controlled by ideology, and just like China was under Mao. And your ideology, it's really your compass, it's your GPS, and it can lead you to the wrong place if it's a wrong ideology. And I think if you look at the majority of the world where it is today, it admits there's only one real ideology in the world, and it's called meritocracy. And the companies that have honed in on that ideology have done the best. Meritocracy. Whoever does the best gets the opportunity. Who does the worst, he gets less opportunity. And, you know, mining here flourished despite apartheid. Didn't flourish because of apartheid. If you had pure capitalism, and I'm not advocating that, I'm not a capitalist because I've seen the bad things it does, but if you had pure capitalism, that means everybody can work for whatever he wants. He can join any mine he wants. He can join any farm he wants. He can say, hey, I'll do that job for this price. And mining industry worldwide, particularly where I've worked, America, Canada, here, I didn't work in Australia, I got a lot of friends there, but it pretty much went on the basis, the more manual labor, the more incentives you got. When you're driving a gigantic dump truck or a gigantic loader, you're pretty much on an hourly rate. But when it's manual, then it's based on productivity. And gee, we used to make 4 or 5 times what the entry-level wage was in America, in Canada, in South Africa. And that's how mines ran for 100, 150 years.
Are there any South African mining players that are getting it right at the moment, or getting it right more at the moment? Mark Kirifani, at the moment you said productivity. You sounded like Mark Kirifani, because that's his favourite word, of course, trying to get a level of productivity. The only thing that's productive in this year's share price of Anglo American is that it's down 60%, from $200 at the beginning of the year down to below 90. Are there any beacons of hope in the South African mining environment, Peter?
Only for those who've left, like Mark Bristow. You know, Mark Bristow, we can say average geologist, was a worse than average mine manager. And then as soon as he left South Africa, he seemed to blossom. But Mark chooses his fights very well, like some of these pro boxers. Choose your fights. So he says, I choose countries that allow me to do what needs to be done. And Stephen Jobs, you know, would Stephen Jobs survive here? No, it's like dropping him into a vat of acid. He wouldn't last for 60 seconds. Your environment must be conducive to creativity, to meritocracy. If you have an environment that is trying to squelch that, then, so how can a guy get it right? If he's fighting an environment, he's fighting Eskom that might not even deliver him electricity. And if they do, you have no control over it. The price goes up 15% a year, 20% a year. So we sunk deep level gold mines. We built huge mills because we knew electricity would never go up as much as inflation. So you could plan out a 20, 30-year mine. But electricity's out of control. And labor's out of control. What's the average pay grade? The average pay increase on the mines is either 4, 5, or 6 times this millennium. But productivity's fallen 50%. So no, most managers here, they're skivvies. They run errands for Gwede Montash, Joseph Mutunjwa, Gwaka Ramathodi. They're errand boys. You know, they pick up the phone, they say, I want you here now. So the MD and the GM must drive up to Pretoria and talk. So last 20 years, they can't implement new technology. They can't try different means of increasing productivity.
That's a really depressing prognosis. It really is.
No, that's a summary of the history and where we are now. The prognosis going forward.
Yeah, but if that's the history, the prognosis is worse. It's like saying you are riddled with an incurable disease, is what you're saying.
Is it incurable? We can change it tomorrow.
How?
We can say everybody must abide by that thing we call a constitution. You know that thing that we told the world's great? They've locked it up so deep in a vault that nobody remembers where it is. If we just dropped our constitution on the desk and said, hey, it says here, everybody has the freedom to join a union or quit a union. Everybody has the freedom to work for whatever he wants, wherever he wants. All we got to do is bring our constitution.
Let's give Lorenzo a turn. Lorenzo a turn. Do you have a slightly less gloomy perspective?
Yeah, I must say, I mean, I don't have I do agree that let's say, I like the meritocracy point. I like the competition point. And I think let's take an example that is part of this continent, so Nigeria. Let's say Nigeria today is faced by low oil price, therefore low fiscal income for the government, a depreciating currency. They have a big threat, but also an opportunity. The opportunity is to build an import substitution sector. So basically build demand for commodities. If that works, and if they are able to build a commodity industry around them, then I think South Africa will rethink its strategy on labor, its strategy on energy.
That's 10 to 15 years hence. Right now, we could take time for these things it takes time for these things to happen. Right now, looking at South African resources counters, this time last year, iron ore was at $160, $165 a ton. Now the futures are pricing below $40 a ton. Outlook for platinum is bleak. Outlook for gold is bleak. Outlook for virtually anything we dig out of the ground is incredibly bleak. It's being reflected in share prices.
Yes.
I'm beginning to see a couple of very brave fund managers stick their heads above the parapets and start picking South African resource counters. Are they mad?
Well, what do you mean by start picking?
Anglo American is worth a buy below 90 Rand a share.
Well, I think there's an interesting message to this, because if you look at how much private equity money has been raised in the last few years and not yet been spent, that I think tells a long story on where investors think stock are really worth, and they're still not buying. So who says that the right, let's say the fair market value price of Anglo American was or is what it was a year ago or 2 years ago, even adjusted by iron ore price and copper price decreases? So I think the time of picking will come, but for me an even stronger message is the fact that nobody's picking yet.
Yeah. Okay, but people are beginning to see gentle nibbles, Peter
No, I
Major.
think that's wishful thinking, Bruce. Either that or you got a hell of a powerful telescope.
I don't have a power telescope at all. I'm completely blind to these things.
Look, why would you buy an equity? I've been in asset management 15, 20 years, and the main reasons I can remember being taught why you bought an equity is either it has earnings that show that equity is fairly priced or cheap, or it has an NAV, which means if you just wanted to sell that equity, it doesn't have to have earnings, but you know you can sell it. Well, right now, none of these South African mining equities have any earnings. That's why they don't know where the bottom is. You know, if you're not earning any money, then you don't know, is that share price worth 10 bucks, 20 bucks, 100 bucks? Or we just saw Evraz, Highfeld.
Evraz, Highfeld Steel.
Highfeld Steel, Evraz. Choose a name. Replacement costs, if you had to build it from scratch, 35 billion Rand in today's terms. Chinese just put in a bid to the business rescuer for 350 million. So I can remember depressing cycles before, 10 years, 20, 30 years ago. You could get things we said for 10, 20 cents on the buck. Now you're buying assets for 1 and 2 cents on the buck. So these share prices, if there's no earnings holding it up, there better be a pretty hard tradable NAV, because if there isn't an NAV either, they're on mushy ground and they can come down more.
Dudley over here has got some razor blades, brand new ones. Menorah still in the wrappings. He's going to be handing them out afterwards for us to slit our wrists. Lorenzo Tencati, the Executive Director of Bryanston Resources, and Peter Major, the ever colourful Peter Major, mining consultant at Cadiz Corporate Solutions, with some pretty gloomy forecasts as to the outlook for the resources sector, which hasn't yet hit the bottom, not rock bottom anyway. There'll be more market upsetting and trading prices into the future. But for now, though, we'll have a nice stiff drink. Good night.